Hey everyone, today we're talking about becoming loan savvy, talking all about student loans. My name is Isaiah Goodman, Chief Financial Advocate at Becoming Financial. Now, it's probably the number one talked about thing when it comes to investments, insurance, financial planning. It's student loans. Somehow, everything in my clients' lives is related to student loans. They can't get a home because of it. They're waiting on getting a car because of it. They want to move to a new job, but they're nervous because they don't know if their loans will be forgiven. Everything kind of relates back to this. So I wanted to talk today about how do we plan ahead? How do we think about where we're at with our student loans as it relates to what they can do in affecting your life? I know it's right around the time for going back to school, so I thought it'd be perfect timing to get this kind of out there for us to talk about. I've heard this story a million times. I know my wife experienced it. You're getting ready to go to your first class for the semester. For some reason, your transcript says you're not registered, but you know you registered. Turns out you have to go to financial aid. So you run to the financial aid office like half an hour before a class. They say you need to sign this paperwork in order to go to class. You sign it, they're saying good to go, right? A couple years later, you graduate, you get this student loan bill, and you sign some student loan for 12% interest, and it's $55,000. You had no clue. That's probably what most Americans go through when it comes to college, unfortunately, nowadays, is in order to get to class, we have to sign the paper, but we're not quite sure what the heck we're signing up for. So we wanted to talk today about a couple things for you to be aware of as it comes to student loans and interest, everything like that. What should you be looking out for? First thing I want you to look out for is, what is the interest rate? Is it 5%, 6%, 12%? How much will you be paying on your loans? So we've talked previously about compound interest. Well, it's really interesting when it comes to investing and all of this sort of stuff. The rule of 72 says if you take the number 72 and divide it by whatever interest rate you think you'll get, it'll take that long for your money to double. So that's kind of a positive example. So let's say 8%, 72 divided by 8 equals 9, right? 9 years is how long it'll take for your money to double if you were to invest it. Well, on the flip side of things, the higher interest rate, the longer it will take for you to pay off. Or obviously, you're going to have to make higher payments. So that's going to be a huge deal for you. If you have the opportunity, you have a little bit more time, I want you to really consider what are your interest rates for your student loans. The lower they are, the better. Now, for some of those who are going into school, there you go. For some of those who have already signed up for student loans, see if you can renegotiate those loans to get a new interest rate, or even if you can move them. Just like some people do with credit cards, you can actually get a new student loan with a new company. They actually buy it from the old place, and now you get a lower interest rate. I would highly recommend that you check that out. Next big thing, what type of loan is it? Is it federal? Is it private? Is it going to be forgivable? Can you consolidate it? There's a number of different things that go into it. Big one right now is if it's a federal loan, can you work in public service? After 10 years, it's forgiven. Well, if that's something that you're calling, you really want to do that, you want to go for those federal loans, you want to go into public service, and you want to be really, really accurate with keeping up to date with your payments. You need 120 consecutive payments to make sure that that thing is taken care of. Then odds are you should have it be forgiven. There's a whole other side of things that I won't go into, but that's number one. The other side of things, if it's private, can you consolidate? I know a lot of times you get student loans from different private companies, or there's several different loans that have come out, each semester over the years. Can you consolidate it into one loan that's, a lump sum with one interest rate instead of 10 different loans with a bunch of different interest rates? It just makes everything a little bit easier and straightforward for you. Last thing, do you need a cosigner? A lot of times I work with clients whose parents have had to cosign on their loans. If there's any sort of default issue, it can create a lot of tension with parents. Obviously, it affects their credit and their future. Or you've got situations to where somebody co-signed, didn't know that they were co-signing. That's going to create a lot of headaches. So just understanding, if I need to co-sign something with a parent or a family member that's going to allow me to get this sort of credit rating, what are going to be the payback terms? Am I going to pay back the lender directly, or am I going to pay my parent or grandparent, whoever it might be? Are we going to have some sort of safety net? If I can't pay it for a month, are they going to have something in the bank so that they can cover it to keep us all, on track with our payments? You want to talk about that stuff way beforehand. Now, let's say we're on the other side of things. We've been paying these student loans for a few years. we've got a cosigner. Well, again, this might be a chance for you to go and look at, hey, maybe I can consolidate these loans with a different provider or renegotiate them. Maybe at this point you don't need a cosigner, so now they can get off the loan. So just a couple things to consider. What's the interest rate? What type of loans are they? And will I need a cosigner? Big considerations when it comes to financial planning and student loans.